There is a signal that the biggest banks and the loudest voices on the financial channels will almost never put in front of you, because the moment you understand it, you stop needing them. It is not a headline. It is not a hot take about where the metal closes this afternoon. It is a slow, patient measurement that has been quietly turning for the better part of a century, and right now it is bending in a direction that has only lined up a handful of times in living memory. The last time it lined up like this, the people who saw it early were called cranks, right up until they were called geniuses. If you are a retiree, if you have spent 30 or 40 years building a nest egg and you are watching it now, this is aimed squarely at you. Not at the day traders, not at the crowd chasing the next shiny thing. At you, the person who did everything right and is now being told to sit still and trust a system that has quietly changed the rules underneath your feet. By the time we are done, you are going to understand a setup that Wall Street understands perfectly well and simply chooses not to explain to you. And I am saving the sharpest edge of it, the part that actually tells you where you are in the cycle, for the very end. So let me give you the first real piece right now, because I do not believe in making you wait for the value. Forget the price of gold for a second. There is a better way to measure it, and it does not use dollars at all. You take the Dow, the big American stock index, and you ask a simple question. How many ounces of gold would it take to buy one share of that whole index? That single ratio, stocks measured in gold instead of dollars, is one of the most honest charts in all of finance, because it strips out the money printing on both sides and shows you the raw tug of war between paper assets and real ones. And that ratio has spent the last 100 years swinging like a great slow pendulum between two extremes. Here is why that matters, and why almost nobody frames it for you this way. At the great stock manias, the moments when everyone believes paper wealth only goes up forever, that ratio climbs into the sky. It takes a huge pile of gold to buy the index, because stocks are beloved and gold is forgotten. And then, at the other end, at the great gold peaks, that same ratio collapses all the way down toward 1. One single ounce of gold, at the extreme, buys the entire blue chip index. That has happened before, and the distance between those two extremes is the whole story of a saver's lifetime. Go back to the peak of the last great gold run, around the turn of the 1980s. The stock market had been dead money for years. Inflation had gutted the currency, and the metal, which almost everyone had written off, ran so hard that at the top the ratio between the Dow and gold fell all the way toward 1. 1 ounce, 1 index. That was the moment of maximum fear and maximum opportunity at the same time, and it is exactly why the number in the title of this video points back to that year. It was the last time real assets so completely overwhelmed paper once. Now spin the pendulum the other way. By the mania at the turn of the year 2000, the world had flipped entirely. Stocks were a religion. Everyone was a genius. And gold, that useless yellow relic, sat ignored in the corner. At that peak, the ratio had swung to a stunning extreme. Dozens of ounces of gold needed to buy a single share of the index. Paper had won so completely that people laughed at anyone who owned the metal. And that laughter, that certainty, is the sound the top of a cycle makes. Not a bell, just everyone agreeing that the old rules are dead. And here is the through line I want you to hold on to for the rest of this, because it is the spine of everything. That pendulum does not stay at the extremes. It never has. From the mania of the year 2000, that ratio has been grinding lower, in fits and starts, for a generation. Real assets clawing back ground from paper assets, decade after decade, while the financial media told you a different story every single quarter. The big picture, the honest picture, has been pointing one direction the whole time. And they do not want you looking at the big picture, because the big picture does not need them. Let me put a human face on this, because a ratio is just a line until you stand where a real person stood. Picture a man near the end of his working years, a machinist, a teacher, somebody who saved carefully his whole life. At the turn of the 1980s, his neighbors thought he was foolish for owning any gold at all, because it had done nothing for years, right up until it hadn't. And then picture that same kind of saver at the turn of the year 2000, mocked from the other direction, this time for being old-fashioned enough to want something real when everyone knew that paper only went up. Both men were standing at an extreme of that pendulum. Both were told by the experts that this time was different. The experts were wrong both times, in opposite directions, for the same reason. They always mistake the extreme for the new normal. So where are we now? That is the question, and it is where the enemy really shows their hand. Because everything about the way the world's most serious institutions are behaving tells you the pendulum is swinging back toward real assets again, hard. And the people who profit from your paper are working very hard to keep you from noticing. Start with the central banks. These are the most conservative, slowest moving buyers on the face of the earth, and they have been accumulating gold at a pace we have not seen in generations, buying more than 1,000 tons a year for 3 straight years, roughly double what they bought in the decade before. They are not doing this for a quick trade. They are doing it because they are quietly voting against the very paper they themselves print. And it went further than most savers realize. Gold has now climbed past the euro to become the second largest reserve asset held by the world's central banks, sitting behind only the US dollar itself. Think about what that means. The institutions that manage the savings of entire nations looked at all their options and moved a relic, a barbarous relic they were supposed to have outgrown, up into the top tier of what they trust. That is the pendulum. That is stocks and bonds losing ground to real assets, measured not in some chart on my screen, but in the actual behavior of the people who run the money. Now, why did this accelerate? Here is a piece of it that is easy to say carefully and impossible to unhear. Not long ago, one large nation had a big chunk of its foreign reserves frozen by other countries, effectively switched off overnight, and every other central bank on Earth drew the same quiet lesson at the same moment. Reserves held as somebody else's paper promise can be turned off by that somebody. Gold sitting in your own vault cannot be frozen by another country. It has no counterparty, no off switch, no permission slip required. That single realization lit a fire under the oldest asset in the world, and it is still burning. I want to pause right here, because this is the exact moment a caring guide owes you something practical before we go any deeper. If you are sitting on $100,000 or more in a retirement account or an IRA, everything I just described about central banks is not some far-off institutional game you are locked out of. There is a perfectly legal, quiet path that lets an ordinary retiree do the very same thing the central banks are doing. You can move a portion of the retirement savings you already have into physical gold and silver, real metal, held inside a self-directed account, without triggering taxes and without an early withdrawal penalty, because it is a transfer, not a cash out. Most people have simply never been told this is allowed. We put together a free retirement protection guide that walks through exactly how it works. If you're watching this on your television, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. This is not just for insiders. If you have $100,000 or more in any retirement account, this is for you. Now let me show you why the smart money is moving. Because here is the part that actually changes things, and almost nobody on the financial channels will connect it for you. For decades, there was one iron rule that governed gold, and the trading desks lived by it. When real interest rates rose, gold was supposed to fall, because a bond that pays you a real return after inflation is the only true enemy the metal has ever had. That rule broke gold's back once before, when a determined central banker took interest rates up into the high teens and crushed the metal into a slumber that lasted 2 decades. So the desks assumed the rule was permanent. And recently, that rule simply stopped working. Real yield stayed stubbornly high, and gold climbed anyway. The old inverse relationship, the one the entire professional world was positioned around, came apart in their hands. When a rule that everyone has traded on for 40 years stops working, that is not noise. That is the ground shifting. It means the market is no longer pricing gold as a bet on interest rates. It is pricing gold as an escape from something bigger, the sheer weight of government debt that now towers over the entire world economy, a mountain of borrowing that has grown to several times the size of everything the planet produces in a year. When the debt gets that large, the temptation for every government is always the same, not to default honestly, but to quietly inflate the burden away, to let the currency lose value so the debt shrinks in real terms. And a saver holding paper is exactly who pays that bill. The central banks know it. That is why they are buying the one asset that cannot be printed. And if you think governments reaching for gold when the paper gets too heavy is some strange new thing, let me walk you through why this pendulum is older than any of us. Back in the depths of the 1930s, when the debts of that era had grown unbearable, the government of the United States simply revalued the dollar against gold by decree, overnight, pushing the official price up by nearly 70% in a single stroke of a pen. Savers woke up to find that the yardstick itself had been changed while they slept. That is the reflex, and it never left. When the burden of paper becomes too great, the people in charge do not ask the metal for permission. They move the price of the paper down against the metal, and they call it policy. They have also tried, again and again, to hold the pendulum still by force, and it has never once worked for long. In the late 1960s, a group of powerful nations pooled their reserves and spent them freely, all to defend a fixed, official price for gold, to keep the metal pinned and the paper looking sound. For a while it held. And then, when the pressure became too great, they simply gave up and abandoned the peg overnight, and the price they had spent fortunes defending gave way. A few years later, the last formal link between the world's reserve currency and gold was severed entirely, and the paper money you carry today floated free of any real anchor for the first time in the history of the country. Every dollar since has been a promise backed by nothing but confidence. I tell you these stories not to frighten you, but to place you correctly on that 100-year pendulum, because the pattern is the point. Paper unmoored from real. Debts too large to pay honestly. Central banks quietly reaching back toward the one asset with no counterparty. It has happened before. It is happening now. And the machinery that profits from your paper has every reason to keep the history buried. Because a saver who understands the pattern stops trusting the yardstick and starts trusting the metal. That is precisely the customer they cannot afford to have. Al, I owe you honesty, and this is where I part ways with the hype merchants. None of this is a promise. Gold does not move in a straight line, and it never has. This same setup has thrown savers off the horse before. There was a year when a central bank merely hinted it might slow its bond buying. Just a hint. Nothing fundamental changed, and gold fell by something close to a third over the following months. The exchanges themselves can make it worse, because they can raise the cost of merely holding a position and force leverage players to sell all at once, driving the price down 30% in a matter of days, while not 1 ounce of real metal changed hands or lost its purpose. So understand, the pendulum swings toward real assets over years, but it lurches and shakes violently along the way. This is a case, a strong one, but it is a case, not a guarantee, and nothing I say here is personal financial advice for your particular situation. Which is exactly why how you hold it matters more than whether you hold it. Own the metal, not a paper claim on metal, because in the moment that matters most, a paper promise and a real ounce are two very different things. Size your position so that a sharp, ugly shakeout, and there will be shakeouts, can never force you to sell at the bottom. The people who lose in gold are almost never wrong about the direction. They are simply wrong about their own staying power. Think about that machinist from the turn of the 1980s one more time. The ones who did well were not the ones who guessed the exact top. They were the ones who owned real metal, in a size they could live with, and who refused to be shaken out in the frightening dips along the way. They buy too much, they get scared in the dip, they sell into the very shakeout the big desks engineered, and they hand their metal to the patient hands on the other side of the trade. Do not be that seller. The whole point of owning something real is that you never have to be a forced seller of it. Now let me hand you the sharp edge I promised at the very start, because this is the part almost nobody will show you. Look again at that pendulum, that century-long swing between stocks and gold. We are not at the extreme yet. We are not standing where that machinist stood at the turn of the 1980s, with the whole country lined up outside the coin shop and the ratio collapsed all the way to 1. We are somewhere in the middle of the journey, with real assets clawing back ground while most of the crowd still worships paper. And that in-between place is precisely the point of maximum opportunity, because the smartest and most conservative money on earth, the central banks, are already positioned. They already see it. The pension funds, the financial media, the average advisor, they have not caught on. They are still fighting the last war. And that is how these things always go. By the time the pendulum reaches the extreme, by the time gold leads every news segment and every advisor in the country is finally recommending it, and your neighbor is bragging about it at the barbecue, the easy part of the move will already be behind us. The recognition comes at the end, not the beginning. Nobody is going to call you and tell you the moment has arrived. Nobody sends you an invitation to the early part of a generational shift. The invitation is the setup itself, the one you are looking at right now. And the fact that it still feels early, still feels quiet, still feels like something only the cranks are talking about is not a reason to wait. It is the whole reason it matters. So here is where we land, right back where we started. Gold has triggered the biggest setup since that peak at the turn of the 1980s, not because of any single day's price, but because that great slow pendulum between paper and real is swinging back toward real. The central banks are voting with their votes. The old rules that govern the metal have broken, and the crowd has not woken up yet. That is the setup. And the window where a decision like this is still calm, still cheap, still fully reversible, is exactly the window when nothing feels urgent, which is right now, before the crowd arrives. If you watch this all the way to the end and you have $100,000 or more in your retirement savings, we hold a free one-on-one educational web conference for people exactly like you. There is no cost and no obligation. Just mention that you watched this full video. If you are on your television, scan the QR code on your screen. If you are on your phone or your computer, go to jeffwayguide.com. Come with your questions. The pendulum has been swinging for 100 years, and it does not wait for anyone to be ready. But you can be ready. And that is the whole point of understanding this before the rest of them do.